Jerry Gidel is ready to comment on the newest U.S. ag outlook numbers and yet the weather in South America. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, before we jump into the USDA Ag Outlook numbers, um, what do you think the South American weather is bringing to the markets?
Well, to some extent, there's a tale of two countries, whatever you like to say. North up in Brazil, they continue to get showers up there, which has its own drawbacks from the standpoint of getting the safrinha crop in up in northern areas. But at the same time, there's been a few showers pop up, but they really haven't been all that beneficial here for Argentina from that with talking about quarters and half inch type stuff and that but they were a little bit of surprise, so that kind of limited the market reactions here after the president's holiday. To some extent there was also lots of caution from people here going ahead of the USDA's annual ag outlook later in the week. But weather-wise, Argentina continues to have issues, and there's various various consultancies down there actually continuing to slip down their numbers here. Early in the week, we had the concerns about the cold weather, and that was down right at zero in places in Argentina. But at the same time, probably wasn't down there long enough, and so it kind of had a flasher early on Tuesday and that. But then the the rain activity that ended up coming out Wednesday night into Thursday morning was I guess the surprise, if you want to say that. Interestingly enough, the consultancies, uh, some of the bigger ones down there, the more established ones, actually went ahead and moved it down. Some of the initial reactions was way down at 30, and I think everybody kind of figured out that the 30 million estimate or less was really a little ahead of its place here at this point. So, but the same situation is that I think as we got into Friday here, even in the midst that we had had one of the Argentine consultancies had down under 33. I think even the Buenos Aires exchange dropped their number from 38 down to 35. So in general here, issues in Argentina continue. There isn't much rain in the forecast for the balance of the month and early in March. So I think that's continued to be a big factor here on the soybeans. And the other twist, as I mentioned, there was some rains up in ongoing up in Mato Grosso. Interestingly enough, the late on Friday afternoon here, they decide the ag department of Mato Grosso, IMEA, put out their number that the plant, harvesting is at 75% up there, or 77%, and that the safrinha corn was that high. That was quite a jump. I think that was over last I remember seeing the number there was in around 40%. So they had a huge week. Maybe that's the case, but there was other people pointing out the fact that Paraná and Mato Grosso do Sul and Goiás did not have a good week of soybean harvesting to create that. So there's still concerns about the corn crop being planted. They normally like to have it by about this time. They they will plant it through up into early March, but it does make it susceptible to the onset of heat towards the end of March and April. when when seasonal situations start to really pick up down there on heat. And so that there is still concerns that the crop potential for corn in Brazil, which is so heavily dependent upon that second crop or safrinha output, is could be under the gun here. But it's a long ways away, so it's talk about, but it's not really influencing the prices here in the short term.
Yes, about the USDA ag outlook, we have seen on that report more wheat acres, less initial stocks of wheat, and more exports of wheat, while soybeans had a similar acreage and slightly more crush and slightly more exports. In the corn side,
Yes,
yeah, and then on the corn side, there'll be more acres, lower initial stocks, and more expected exports and feed.
yes. Well, the interesting twist on it is that year over year, these numbers seem to shock somebody here the last few days, Thursday and Friday, per se, versus the trade. The trade expectations for some of these numbers were actually a little bit friendly, relatively speaking, per se, particularly in soybeans. The trade was looking for a $500,000 to $1 million up on seedings there in the coming year. And the USDA put their estimate down at unchanged. It's 87.5 million acres. Their crush number was pretty aggressive. I think that is a good potential number out there. The interesting twist that's come up this last week is that American Soybean Association and some of the other ag associations and groups are really stepping up their effort to get the EPA to really acknowledge the idea that there's going to end up being a significant increase in U.S. crushing capacity, primarily for bean oil to make renewable diesel. And that's a real feature out there on that. And so the USDA actually put that in there and that. But, the soybean numbers here, even, and the other one was interesting, and it's an issue that I've had contentions with the USDA for a couple of years here, is that the USDA, it seems to be still using some older style trend line numbers. They had 52 bushels to the acre. That's right at the high side of all expectations again. They even had, and that created enough supply here to still see the carryover stock go up to 290 million from this year's 225 million because of the even with the very hefty increase in crush capacity here in the U.S. So that, all these numbers, are quite interesting from the point of view that the on the soybeans, corn and wheat too, and we'll get to those in a second, is that these are all economic projections, things of that nature. Actually, the baseline numbers that we had back in the fall, corn was higher than the USDA's number today. Beans were not, and so we won't get our planning intentions until March 31st on all these numbers. So that's pretty interesting from there. The real biggie that kind of hit this market out of the blue here is that the investing and commodity funds here all of a sudden woke up and saw these numbers here on Thursday and Friday. Now the interesting twist on that, traditionally the ag economist this year would be Seth Meyers, puts out a general idea on Thursday morning, and then they release the S&D numbers on Friday morning before they have their breakout sessions for the grains and the livestock and sugar and cocoa, or sugar and cotton and places like that. Well, this year those were available, and so they were out in the before even the session started on Thursday. And so I think that prompted some of the reactions here. All of a sudden, these investing funds woke up and figured out that maybe the USDA's numbers here, or USDA's ideas, we're going to see a building in ending carryover stocks. And we had some liquidation from people that didn't really hadn't been paying attention, if you will, to what's been going on in the next year. Now the problem is this is all next year, but you know, it's interesting in the world of commodities. If information's here and now, then I react to it now. And I guess unfortunately that's what happened in the setbacks we had on Thursday and Friday in the corn and other ones. We'll take a look at those other numbers in a second here. Why don't you give us an update on how that thing looks there on the corn again?
Yeah, so on the corn side of things, we had more acres, lower initial stock, and also more exports than feed expected.
Yes, yes. Well, the interesting twist is that actually the corn number from the baseline was down 1 million acres, down at 91. Actually, that's not all that far from the trade's expectations of 90.85 or 90.9. The interesting number in that situation was the ongoing optimism, or I'm not sure where they've continued to use the same trend line expectations that's been created probably 5 to 7 years ago, back after we ended up coming out of the big drought of 2012. And unfortunately, we haven't been able to really move above 176 and change, basically 177. Even last year we were 177, and the final part of the year we took about 4/10 of a bushel off of it. So now all of a sudden they're 181.5 bushel number. Wow, you're talking about four and a half bushels above the previous high. That usually trend line numbers are supposed to be able to split the difference between the high and the low expectations in that. Well, if you're talking about the expectations being 4.5 bushels higher than the highest number previously, to me, that seems like that's the high side of the number, not the low side or even the middle from there. So that really was the kicker in the corn number. Yeah, so we did end up having the USDA increase their carryover or their demand numbers on corn and feed from the standpoint that they're optimistic, I guess, about the poultry industry coming back here from the bird flu. Right now, the cattle industry at this point is going to be a struggle. We're not going to have the kind of feedlot numbers because we actually had a lot of these animals where we couldn't end up keeping them out on the pasture, so we had to bring them into the feed yard. And once they get to the feed yard, they really don't go back out from there. And so at this juncture, the cattle portion of our feed demand is going to still be pretty lackluster. I have to say right now that even pork is somewhat there's going to be some bounce back here because of the higher values of pork, but I'm wondering about the 5.6 if we're going to be even get to that on the demand side. The real kicker is that the export demand numbers that we've had over the last few years are probably still going to be muted unless we ended up having some difficulty in that safrinha crop in Brazil. The USDA's 2.2 billion number is about basically 10% up. We're at 1.99 against this 2.2 in that, and so that number is particularly I wouldn't say optimistic. I would say it's realistic type situation, but and it could even be higher if something got wrong with some of this late season issues and heat and some of the. We definitely trimmed back last year's output in Brazil because of that issue, and that could still be the case this year. But basically, the 1.9 billion number that was expected from the trade kind of came with the USDA's number here at 1.887 billion, and I guess hallelujah, some people have figured out that that was higher than the current 1.25 number we're using. But as I said, I am really I even had a question into the USDA's panel they had on Friday about this 181.5. Somehow or other, my question never was able to get answered on the during the session. So I'm still going to dig into that to see if somebody can tell me exactly why that's a good trend line number. But that's not the that isn't the that number particularly is a very difficult one to overtake. If we're talking about using a 178 or 179, this 1.8 number could end up being 1.4, 1.5. But that wasn't the case when we saw the numbers on Thursday morning from there. Wheat's next. What did we? That one's an interesting one. We really didn't change our carryover stock year over year.
Yes, but still the acreage had a significant increase.
Yes, the acreage is continues to be, I think, a mirage, in my opinion, about what's really going to come out there. It the interesting twist on the 49, I think it's 49.5 or thereabouts number that the USDA, and that is about what the biggest thing is that we've had such a hefty increase in the winter wheat numbers, and we mentioned this a couple times before, the 1.6 million increase in Texas. I feel very cautious that that's really going to turn into actual acreage that's going to produce wheat. I'd have to say more than half, maybe 3/4 of that will turn into either being grazed out or basically turn out to be acres that isn't harvested, and they'll get some type of payment for it. They can go ahead and plant something else if that's the case, and this was registered for insurance. They'll get paid on the wheat, but they won't be able to get insurance. Say they put sorghum in, and that in Texas, but that probably isn't a bad move. We had some very high levels of insurance coverage, and that's part of the reason why I think the plantings and seedings on winter wheat were so higher than expected. Trade was looking for a couple million. We got over 3.4, I think it was, million increase in winter wheat. We have some slight increases in spring wheat and durum, but that's how that number gets up. If you look closely, though, the number they use for harvested, traditionally we're like 7, maybe 8 million is our difference between planted and harvested in wheat. Last year it was 10 because of the issues that happened in the Southwest. And now this year, that number is actually projected to be 11 million lower. So even with the higher seedings, the USDA is very cautious that the harvested acres are not going to be there. So, but the kicker continues to be the 49.2. There's still optimism that La Nina is going to switch over to El Nino. It's been beneficial in the eastern U.S. We've seen a lot of rains here to kind of calm down the drought concerns east of the Mississippi. And we've had a tremendous amount of good rains out in the West Coast, and California and Oregon and Washington have improved. Interestingly enough, the area from Nebraska all the way to West Texas still looking pretty ugly out there. They're still in a, and to some extent, if rains, solid rains all of a sudden show up in the middle of April in Kansas, Oklahoma, and West Texas, then all of a sudden we can have better yields than you think. But it's hard to really imagine that right now. The interesting twist, as we talked about here, is that the output, even with this big plantings, we're talking about increasing the U.S. carryover stock by 40 million, is all up to 608 from the current 568 and that. And there's some people that stare at the USDA's export number for next year. We're still going to be very tough, uncompetitive, if you will, in our exports. But I think the concerns about Ukraine and their issues over there has prompted the USDA to throw that export number for 2023-24 up to 825 million. That's a 50 million increase from what they're currently using for this year. So overall, wheat wasn't all that negative. Corn was pretty negative with a big jump up to 1.9, and the beans. I don't know if you can say 290 is a hugely bearish number, but it wasn't a bullish number, and so we had lots of investing funds deciding to stand on the sidelines here and liquidate some of their long corn and soybeans at this point.
So now next week we're going to have a full business week. What do you expect for the price levels next week?
Well, we're actually, like you say, going to get back to a full week of trading. From there, the coming week, I kind of feel like that we've kind of already impacted this market here, and we're getting with the investing public deciding to take off some of their yes. Now the other thing that's kind of subtly going on that maybe have prompted these investing funds, by the way, to be liquidating was the fact that after I think it was the fourth week, on Friday we had our first update of the commitment to traders report. Now this is only for the first week of back in I guess it was late January, early February, that we had an issue with one of the exchanges not being able to provide information. So they hadn't been doing any information on all the exchanges until they got that straightened out. And so that situation has supposedly finally been corrected. And so they're going to start issuing these numbers. Kind of surprising that they're going to go not pick up the differences, maybe do 2 weeks at a time instead of one, but they're right now, at least they're going to issue, they just issued one on Friday, and it was so far back that it didn't have a lot of information, but I think that's the one thing that may be added to the funds deciding that they wanted to be on the sidelines here with after the USDA's numbers along with that update. But the coming week here, there's not a lot of rain until mid to late week in Argentina. That's going to be a factor. And then I think the other big thing that will be a market focus of the market is how does the initial talks start to begin here in between the Ukraine, Turkey, Russia, and the UN. That sounds like it's going to be starting here early in March, which is actually surprisingly going to be on Wednesday of this coming week, March 1, and so that's going to be a big feature. The one thing that probably didn't help the psychology of the markets midweek, by the way, was the comments from Ukraine that they're kind of looking to, instead of having these 3 months at a time situation, and that they're very want to see if they can go ahead and get a year's agreement here, so that this thing is agreed upon that's going to stay open, not going through these negotiations all the time. And the other couple things that are kind of interesting is that they want to add 1 or 2 ports to the original 3, and that particularly the one that's very close to some of the Russian lines there, just north of Crimea. And then the third thing was that they were also trying to get more inspectors from the Russian side of the inspection scenarios down there in Turkey. They only have 3 teams there, and they are not really getting, there's a huge backlogs of that, and they're hoping they can, I don't know if they have a specific number they're looking for, but I would sense that they'd like to have 3 times that amount. So in essence, it'd be 8 to 10 teams down there doing the inspections of these things. So more things go out. And they're pointing towards this being something uh, for the nations that are needing this wheat and corn, because a lot of this Ukrainian corn is for and grains is for some of the needier countries around the world, and this is not helping them get their supplies. So I don't know, that'll be an interesting scenario. At this point, the early reaction to that was, wow, you might get the extension of 6 months. You might end up getting one or two more teams, but the potential to really make the grain corridor really sing uh, probably is not going to be agreed to by the Russians. This is one of their subtle ways of limiting the cash that Ukraine gets from their exports.
All right, we'll check and get back next week.
Sounds great, sir. And you have a good weekend, and we'll see what the markets really want to do here in this post ag outlook period.